lot of Australians get sucked into these tax havens and thinking that they should be moving all of their money offshore and investing offshore in a lot of these complex investment structures. But
there's a lot less tax while you're away. Depending what country you're in, of course, there's also stuff around like, deal tax treaties and so on. So it depends where you are. But you can end up paying a lot less tax in Australia while you're away compared to if you're here on your investments.
For sure. And if we talk about the movement of the money, so like actually like moving money back, and then dealing with currency might be a consideration there as well, because you might be getting paid in whichever country that you're living in. You might be getting paid in Singaporean dollars, US dollars, or whatever it may be. And my understanding there is there's actually no issues of like bringing money back, so to speak. Now, if you're bringing hordes of cash in suitcases, that's going to raise some question marks. I'm sure of it. And I know you have to declare that anyway. But the movement of money back and transferring it, there's no real issues with it. I've got a client I'm working with at the moment who's actually going to be moving quite many millions of dollars back to Australia. Welcome back to the Winners Playbook. Josh here with Billy. If you're coming back to Australia after a stint overseas, there are a few money jobs that make the return smooth. Today, we'll cover tax, banking, super, and investments so you land clean and can get on with life. No drama, just a checklist that works. But of course, before we jump into that, Billy, what's the latest on your own, mate? And any exciting things happening this week or have happened?
Have happened. Well, tomorrow, I'm going to a Bucks party tomorrow, and I have not been to many of those in recent years because all my friends are pretty much married long ago. Sort of not someone I'm close friends with, but it's like this classic Bucks party setup, like the full day at the races and bars afterwards and everything like that. Like I'm tired just thinking about it. So I might not participate for the entire event because I'm not sure if I'm up for it, but that should be fun.
Yeah. What's the races? Is it just some local one or something, or is there?
No, it's the major one because we're coming into spring carnival, so it's a Cox Plate at 𝗵𝘵𝘁𝗃, which I've never been to that before, so
didn't even know.
Fun.
Shows how much we're into horses. Yeah, I had absolutely no idea. Are you one to throw on a little bet here and there, or what's your relationship with the horses?
No, I'll definitely throw in some bets. I think that makes it fun. I don't know.
Yeah, what else do you do?
What else do? You have a few beers, put some bets on. I've got a few close friends who are in the group that's going, so it'd just be a good social event.
Yeah, I find it interesting, the horses. I've never been able to get into it, but my grandpa actually, he was one of those people that would pull out the newspaper and he knew how to pick the winners. So there's obviously a formula and strategy to it, but yeah, he understood and obviously knows the trainers or horse. I actually don't know. I don't know how it works. Every time I've bet, which I never bet anymore on any of that stuff or even gamble for that matter, I don't get much of a kick out of it, but I usually go look at the best names and have a crack based upon that. Do you have a better strategy than that, Billy, or?
No, I mean, I used to do it a bit in my early 20s just because I was out with mates all the time and you'd put bets on here and there. And I learned pretty quickly, it doesn't matter how long you stare at the form guide, it makes no difference to your outcome if you have no idea what you're looking at. So yeah, I'll just pick some names that I like and go from there.
Yeah, well, it's kind of like the finance game. Past performance, no indicator of future performance, I guess you could say. It doesn't matter how that horse is going. It's anyone's win on the day, I guess. Anyone can take it. So, I don't have a Bucks planned tomorrow, Billy, but I've had a pretty good week. Lots happening, and actually attended a really good session put on by EO yesterday, which was talking about EOS, which is a framework for businesses to operate their business from, and it gives really good structure around planning out your vision and then how you sort of track a lot of metrics and data within your business. And so just really good key takeaways from that. And the speakers actually shared some really good analogies that have like stuck in my mind around, like, particularly for businesses and business owners, where you're trying to do so many different things and then you're analyzing it all and you're like, how do we streamline this, automate that? And you're constantly looking at it, and sometimes you don't actually take any action because you're waiting to try and figure out the perfect formula to achieve whatever you're trying to achieve. And then the guy that was speaking yesterday had a good analogy of like making it as similar, like think about it like golf. So, when you're playing golf, you step up to the tee, you look out and say it's a 300-meter hole, whatever it may be, and it goes around a corner. There's a lake over here. There's trees here. The roughs there. There's some bunkers here. And then if you're just sitting there analyzing it like nothing, you're not taking any action, when in reality, all you've got to do is just get up and just hit the ball, just start some level of activity. And he explained it's sort of similar to, a lot of business owners and businesses where they're looking at doing these things, and you're just so busy analyzing, looking at these alternatives and this and that, when it comes down to it, you just got to take some form of action and get that momentum moving. So yeah, some really, really awesome key takeaways, which you want when I was away from the office for a day yesterday. So you got to walk away with some good takeaways to make it worth it. So fortunately was some really good ones there for me. But not what we're going to be talking about further around business today, but we're going to be talking about building on a little bit of the podcast that I did the other week with Tristan, the the accountant based over in Singapore. But yeah, definitely a space that we're looking at a lot more around working with Australian expats and non-tax residents. So if we start first and foremost, Billy, looking at before you leave, some of the considerations that you need to be looking at around your accounts and timing and so on and so forth, where should people be starting before they actually take off?
Yeah. So, well, firstly, anyone who hasn't listened to you and Tristan, who's interested in this expat stuff, or they're considering moving overseas, I recommend that. So some gold in there.
Yeah, it was.
Yeah, it was a really good one. Yeah. So if you're going to leave, I mean, it's a lot of life admin, right? Like you just, you end up with so many different accounts and bills and a million emails coming at you and logins and passwords. And so if you leave the country, with that not under control, it can really come back to bite you. So make sure that's you want to consolidate and simplify as much as possible. For example, if you have 8 different bank accounts and 3 credit cards, you don't want to leave the country with that still in place. So shut things down as much as you can. Make sure every account that you've got and every provider you deal with has correct contact details. Make sure you've got all your logins and passwords and everything like that. One big one, which I have seen issues, is around bank accounts, because once the bank realizes you're not in Australia, or if they have issues contacting you or something like that, I've seen it happen where they notify that individual and say, we need you to come into a branch to identify yourself. And if you're not in the country, that's pretty difficult, and they can then lock you out of your own bank account. So I would suggest having 2 bank accounts at least, like just with 2 different banks, just to reduce the risk there. If you have complex affairs, you might even consider having someone with financial power of attorney in Australia who's able to deal with your affairs on your behalf. And if you have complex affairs, you may have a financial advisor and an accountant in Australia who you can lean on. So there are a few of the things. You don't want to leave, credit cards, unpaid bills, electricity bills, all that sort of stuff. Like you want to make sure that's all tidied up, tax returns, tax debts, anything like that that's just going to compound while you're away. So you want to tidy all that up. And then the last one we've got in here, which ties into your discussion last week, is around tax residency status and understanding what that means when you leave Australia and the impacts that will have on your investments and your tax affairs. Yeah. So there's a fair bit there, Josh. What do you anything?
Yeah, a bit to unpack. And a couple of other points that maybe emphasizing the powers of attorney one is a really good one, because I've, we're possibly going to be working with some other clients soon, but I've got a few clients already overseas, and they didn't know to get advice from an advisor moving forwards. We need them to have a power of attorney in place to sign off on the documents on their behalf. So if anyone out there listening that wants to engage with a financial advisor, although we can meet online and you can sign things on DocuSign, like there's no issues of still being able to do that in a way that it's still easy from a tech perspective, but from a licensing or compliance point of view for advisors, like we do need our clients to get powers of attorney in place. Now, you can still get it done when you're overseas. It's just a little bit easier doing it maybe before you would take off. So I would always say get that in place, particularly if you're going to be working with an advisor. And another one I think that's relevant is I've had some other clients that have wanted to move offshore after being in Australia for a few years, and it wasn't really their plan or their intention to move overseas. ensuring that your insurance gives you worldwide coverage is a one that a lot of people don't know about. And some insurers are really good with this, some of them are not. So the clients that I've got that have gone offshore there, we made sure that their insurer would give them worldwide coverage, because sometimes it could possibly be an exclusion on a policy. So if you are holding any, and when I'm talking insurance, we're talking life insurance, total disability, income protection, or trauma insurance. We're not talking about your health insurances or car insurances, because you probably end up setting them up in a new country anyway. But those main insurances that you might have taken out through your super fund, or maybe external if you've worked with an advisor before, ensuring that they actually provide worldwide coverage, because then once you're overseas, it gets problematic for getting insurance actually in place when you're overseas. And then the signing of those documents, in most situations, you just can't get any insurance. And I've had a client in the last year or so who wanted to get coverage in place, but they'd been overseas for a little while, and then I met with them. There was no insurer that would basically give them any coverage back in Australia until they would return permanently to Australia. But his partner had full coverage in place before she left, and therefore she's okay and she's still fully covered. So yeah, definitely one to have a think about, and getting your affairs, and that even might be your will in place as well. That's probably another consideration, which is can be complex. If your affairs are a little complex, getting a will in place, and then how that works from an estate planning point of view when you've got another jurisdiction or country that gets involved. Some of that I actually don't even know the answer to. So that would be, if you've got more complex affairs, you definitely would want to get your estate in order before you take off as well, and maybe understand how does that work with that other jurisdiction. Are there death taxes and things? I'm aware of some of that happens in Europe with on estates. So yeah, there's a lot to actually consider there, and that probably gives me an idea for a future podcast, Billy. That might be one to dig in on with regards to estates.
Like, there's pros and cons of the amount of regulation we have in Australia. And one pro, like, because we are so regulated, it often actually makes sense to still maintain a lot of your finances and your assets and so on, and insurances and stuff in Australia while you're overseas. And if you have an advisor and an accountant already engaged here, for example, that makes it a lot easier to maintain and monitor those things while you're away.
Yeah, for sure. And you're touching on the tax residency piece, which I did talk about with Tristan the other week on the podcast. But do you want to touch a little bit on that, in terms of sorting your tax residency on return? Like, what are some of the key things to look out for there, and what the ATO is looking at?
Yeah, so I mean, when you depart Australia, like with tax residency, the key things are like, where are you living, and evidencing that, right? Do you own a property? Are you signing a lease agreement? Where are you working? The dates associated with that, and also your intention, right? So if you're going overseas to work for 3 months, then potentially you're still an Australian as far as the tax office is concerned. So they're the main things. And once you return, it's similar, right? It's when you are you starting a new job here? Are you signing a new lease agreement? Are you moving back into your former home? So it's the dates associated with that, and the ATO has residency tests to help you figure that out. But what can also happen is that's probably going to happen partway through a financial year. So you may need to sort out like tax returns in different jurisdictions and so on. Aside from that, there's all the stuff you spoke about with Tristan around treatment of assets. And if you have a share portfolio, if you have investment properties, you really need to understand how the residency rules tie into that, because there can actually be huge benefits if that's managed well while you're away, and then when you return to Australia.
Yeah, and that's a point for the question that we were talking about before you leave. You have a big decision to make. If you do own shares, managed funds, or ETFs, you need to decide whether or not you're going to do this deemed disposal, where basically you would, on paper, sort of sell them at that point in time, although you don't actually physically sell them, but you're deemed to have disposed of those assets, and then you pay tax on whatever the gains would be at that point in time. But then essentially the capital gain from that point until you then come back and recommence your residency is essentially ignored, and then your cost base would reset once you start back in Australia and commence your tax residency. So it's a big decision you have to make there, because business owners can do the same thing as well with their business. But yeah, it's a big one, because if you do that, you're not actually selling the asset, but you'd need to have the money to pay the tax. So if it's a big tax bill and you're not selling the asset and you don't actually have any spare cash available, it can be quite problematic. But you've got a bit of time on your side with that one. I think Tristan was saying if you leave in the financial year, you've still kind of got a fair amount of time until you can make that one within that next financial year or something along those lines.
It's when the tax return is lodged, presumably, is when you make the decision. Yeah.
So you got time. So it doesn't need to be like done before you leave, but you just need to make that decision sort of within that financial year of what you're going to be doing. And then, once you come back, then you can sort of reset that cost base at that point in time, which is incredibly powerful. And I think that's talking to one of the points of, a lot of Australians get sucked into these tax havens and thinking that they should be moving all of their money offshore and investing offshore in a lot of these complex investment structures. But I've seen them before, and when you dig underneath the hood of them, a lot of them, they might be tax efficient, but then you're getting absolutely reamed by fees and the advisor fees or whatever else that's in them, and hidden commissions that you're not even aware about. So that's where, investing in a place like Australia, where it's highly regulated, all of that stuff has been stripped pretty much out of our industry. And so you know what you're putting in and what's invested in the returns, that you can ultimately get, and you don't have to worry about, the hidden fees from an advisor or commissions that you're ultimately not aware of. So I think it does point a lot to, the appeal of investing back in Australia, which might not make sense for a lot of people who think that isn't that the highest taxed environment or one of the highest taxed environments, because it is, but the rules actually are quite favorable for residents.
There's a lot less tax while you're away, depending what country you're in. Of course, there's also stuff around like what's it called, like double tax agreements. That's what they're called. Double tax treaties and so on. So it depends where you are. But you can end up paying a lot less tax in Australia while you're away compared to if you're here on your investments. If it's planned out well. So you may not need to go to all that cost and complexity of moving money out of the country and then trying to get it back and all that sort of stuff.
For sure. And if we talk about the movement of the money, so like actually like moving money back and then dealing with currency might be a consideration there as well, because you might be getting paid in whichever country that you're living in. You might be getting paid in Singaporean dollars, US dollars, or whatever it may be. And my understanding there is there's actually no issues of like bringing money back, so to speak. Now, if you're bringing, hordes of cash in suitcases, that's going to raise some question marks. I'm sure of it. And I know you have to declare that anyway. But the movement of money back and transferring it, there's no real issues with it. I've got a client I'm working with at the moment who's actually going to be moving quite many millions of dollars back to Australia over the next probably 12, 18 months or so. And so, but it's clear, it's all legit. There's assets that are just being sold over in another country, which are property assets. So, if someone looks at that, it's like, well, this is where the money's then come from. Because I'm sure if you're just bringing in millions after millions of dollars into your bank account, the bank's probably going to be asking a few questions there, and a few things might be getting flagged. What do you think there, Billy?
Well, it seems the only real risk to me is like, it's just about the origin of the wealth. So like I had a client I was speaking with, and they had some inheritance money coming from Zambia. That's an issue. That's an issue, right? So a country with a lot of corruption. We don't have tax treaties and things like that. So all the banks are going to question, where's this money come from? Has it been taxed appropriately? Where did this wealth, what's the source of this wealth? And you could potentially, that person might struggle to get that money back into Australia. But if it's legitimate wealth in a developed country, and you've just built up some wealth from working or investing or whatever it might be, you shouldn't have any issues. So what do you need to worry about? I mean, moving that money is easier than it used to be, because you've got a number of services like Wise, or like there's different foreign exchange services you can use. We won't talk about crypto because that's a whole rabbit hole. But there's plenty of ways to move that money. The big banks can often be expensive, so you can end up being better off using one of those other services. You want to be aware of currency exchange rates. If you're moving a large amount of money, you might want to monitor those exchange rates and potentially do it in tranches rather than in one go. But really, it's just about the AUSTRAC stuff, right? Like, where has the wealth come from? Has it been taxed appropriately? All that sort of stuff.
Yeah, I think it's pretty straightforward and it all makes sense. And then talking about when you are home, so we already touched on the insurances side of things, like particularly when you go away and then when you come home, your policies are still there, it's all working, there's no problems. But there can sometimes be a bit of an opportunity to actually exist with superannuation because you can still contribute when you are overseas. But for the most part, Aussie expats, they don't contribute to their superannuation whilst they're overseas, and for good reason, because unless you have income back in Australia that you might want to offset. So if you've got investment properties back here in Australia, share portfolios or whatever it may be, and they're producing lots of income, you can make contributions to your super and claim them as a tax deduction. So sort of cap your tax rate at 15%, because when you're a non-resident, I'm pretty sure the the non-resident tax rates is basically 30 or 32% from the get-go up to the first 100 grand or whatever it may be. So if you're able to put some money into super and claim it as a tax deduction and offset some income, that is beneficial. But for the most part, Australians just completely neglect their superannuation. So there is a bit of an opportunity of like that bring, well, not the bring forward rule, the catch-up contributions rule, Billy, that we were actually talking about with some other clients recently. Do you want to unpack that one a little bit and how that could come into play?
Yeah, I mean, as you noted, like with expats, they'll often say, why would I care about super, especially if they're in Singapore or Hong Kong or a low tax jurisdiction. That like there's no benefit in them worrying about super at that point because they're on such low tax rates. But as soon as you come back to Australia, if you're coming back to Australia and you're going to have lots of taxable income here, straight away you should be looking at super, because that's the best tax environment there is in Australia, pretty much. And if you have been away for a long time, you might have a pretty sad looking sort of balance there, which means you've got plenty of opportunity to catch up. You mentioned these carry forward contributions. The rules are essentially you can put up to $30,000 in super each year and claim a tax deduction for that, but you're allowed to catch up 5 years worth of those contributions. So if you've been away for 5 or more years and made no contributions, you can potentially put up to 100 grand in super or more and claim it all as tax deductible. So that's certainly one of the first planning opportunities you should be looking at after your return to the country.
Yeah, and the only thing to add there is with that catch-up rule, as long as your balance is below $500,000, it's play on at that point in time. If your balance is above $500,000, you can't do it, unfortunately. So there is a bit of a timing element to it. So that's where you might want to just be conscious of that if you're an expat or just anyone in general around that.
100%. And then there's a lot of people don't know at all about the after-tax contributions as well. So you can get for most people, another 360K in there very quickly. So if you're coming back to Australia and you're in your 50s, for example, and you don't have a big super balance and you built up wealth and assets elsewhere, you should absolutely be looking at how much you can throw at super in a short space of time.
Yeah, that's a part I was going to add actually, is around the age, because that's the consideration is like if you're in your 20s and 30s, maybe that might not be the best move for you because you're going to lock it away for such a long time. But if you're in your late 40s or early 50s and you're eyeing off a 60 retirement or somewhere around that sorts, superannuation's your best friend. Can't beat it from a tax perspective. So 100% agree. And what about rebuilding your savings and getting into an investing routine once you return, Billy? My thoughts there is if you kind of had your strategy running whilst you were overseas, nothing really changes a great deal once you get back from a savings and investing standpoint, other than the fact that you might go from a top tax rate of 24.5% in Singapore. And if you're on big dollars back in Australia, well, as soon as you hit 190, you're at 47%. So you're going to take a hit to your cash flow straight away. So that's probably where there does need to be a bit of a revisit of your cash flow system and what you've got flowing on there. And then naturally you might not be able to invest as much and so on. But I think this probably more so talks to the importance of planning and making the most of it whilst you are overseas. Because what a lot of expats do is that, they go over, they make the best dollars that they're probably ever going to earn, and they utilize that to rapidly build wealth. And rapidly building wealth might mean saving, investing, or paying down debt. Could be all of those. It generally would be. But if you do that right, then when you get back and you get the shock of, the high tax system that we're in on the personal tax rates, or if you've made all the right decisions whilst you're offshore, hopefully you can come back and, maybe you're debt free. You've cleared your debt on the family home, or you've got a money built up to buy a family home, and you can afford to live off a lot less, or compared to the lifestyle that you might have been living overseas. What's your thoughts there, Billy?
Yeah, well, it's going to be a dramatic change, and it's just financial planning, right? Like,
Yeah, 101.
it's going to be a dramatic change. If you've been in Singapore, for example, you might be paying an absolute fortune in rent. You might be doing a ton of travel because there isn't a whole lot of domestic travel in Singapore. So you might be on and off planes exploring. You come back to Australia, yes, you're going to pay a lot more tax, but you might not be paying as much for your housing, right?
Yeah.
So it's just revamping that whole plan. And yeah, you might, as we discussed, you might need to start looking at super, because we don't have that many low tax structures we can use. But it's just redoing that whole plan and figuring out your strategy from there.
And then if we talk on, when we're returning as well, we'll stay on the theme of that. What mistakes some people might make when they return, and how do you avoid them? We were actually talking a little bit about HECS as a bit of an unknown for a lot of people before we got on here. What are some of the points you've got noted there?
Yeah, look, there's the obvious ones which tie into what we were talking about before, like coming back and finding out you've got some unpaid bill or unpaid debt that's just been compounding for years and years, and, has an effect on your credit rating or something like that. So that's something, if you come back to that, then it's too late. That's something you should have dealt with before you left. Losing track of things, losing track of accounts, losing logins, all that stuff. Not being across the tax residency planning, which we've just spoken about. So that all comes down to having a plan and having advice. But the HECS thing is an interesting one, because this is something I only recently learned about. Even though you're a non-tax resident and you're not paying, while you're overseas, you're not paying Australian income tax on your employment earnings, the HECS minimum repayment thresholds still apply. So if you've been overseas for years and years and you haven't thought about HECS or done anything about it, when you come back, you could find that you need to make a massive payment based on all those years of earnings.
Geez, how good would that be? Come back to
a nice little surprise, wouldn't it?
HECS tax bill. Yeah, I seen that a couple of years ago with the client. That was the first time I sort of learnt that as well, whereby they were away for a few years. Unfortunately, it was only a few years, but he had no idea that he was supposed to be paying HECS at that point in time. So they did a bit of a catch up. But yeah, well, imagine if you were away for 10, 15 years and you racked up a HECS debt of 100 grand before you left. Can you imagine what that would have? And you're probably earning big income whilst you're overseas, and you've got the highest HECS deduction. I think it's 10% when you top over a certain level. It's like 10% of your pay or somewhere around there. So imagine, that could be a fair amount that you walk back into. Yeah, wouldn't be a nice surprise.
I mean, 𝗍𝗲𝘁 gave everyone a bit of a discount recently, so that's something. But that wouldn't change the fact that you'd be hit with a big repayment when you come back. Yeah.
No, that's probably one of the most positive things we've seen out of the government, is it lately? I think we've talked a lot about all of the downsides of what they've, but 𝗍𝗲𝘁 has come out with that one, hasn't he? What was that again? That was a 20% reduction, wasn't it?
It's reduced everyone's debts, yeah.
Yeah. Was it by 20%? I think it was. Was it a 20% reduction? Yeah. Well, good on him. Not that I have a HECS debt anymore, but some positives and amongst all of the other things that are out there. No, good. Did you have anything else noted down there, Billy, on the return, or?
No, I mean, with most of these things we talk about, if you've got some complexity or you're dealing with decent numbers, you really need some advice, right? It's very hard to unpack all this stuff on your own, and a lot of it's accounting, really good accounting advice in this space.
Sure.
Obviously, we want to talk up financial advice wherever we can, but a lot of this is tax advice as well.
Yeah, and that's like with the clients we're chatting with earlier in the week. It's like you need both. You don't need one or the other. Like you need a good accountant and a good team of advisors at the same time. But I think the clear thing here is just like not having any loose ends, and DIYing, it can be such a risky thing, particularly when you're talking big dollars. The costs of getting some proper legitimate advice, weighed that up against the risks of DIYing and you getting this wrong and costing you who knows how much and setting you back. It makes no sense in my mind. And I was I was having a conversation earlier just today around like a part of when my life changed is when I realized I shouldn't DIY everything and try to save my money and try and do everything myself. And I figured out, I was like, no, I should actually invest and get help and pay other professionals to do things that, you know, I could probably have a crack at doing and go okay at, but it's like, no, it's not my time that I want to put into that. I'm not passionate about it, and it's not where my time is best spent anyway. So yeah, I think DIYing things like this, particularly when there's cross-border tax involved, that's getting scary. So would proceed with caution, say don't do it.
Especially if you're going to go and bid big bucks overseas, probably spend a fortune on travel and everything else. It's worth carving off a few grand for some decent advice as part of it, I think.
Totally agree. Well, we might close out there, Billy. And everyone, if you are getting value out of what we're speaking about, please give us 5 stars on Spotify and Apple. As always, if you've got any topics or areas you want us discussing, feel free to send them through. And if you want to chat to any of the financial advisors in the business, you can jump on the website and take your pick and reach out or book in for a free 15-minute call where we can unpack your situation more to understand a little bit about where you're at and whether or not you should even get any sort of financial advice in the first place, or at least point you in the direction of a professional that you should be speaking to. But other than that, Billy, we'll close out, and I look forward to hearing about the Bucks next week.
Will do. We'll see if it's anything I can disclose or not. But yeah, look forward to it.
Thanks, mate. Cheers.
Disclaimer. The information contained in this podcast is general in nature and does not take into account your personal circumstances. Please head to the show notes if you wish to book in a free 15-minute call to discuss your personal situation.